The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call. I just wanted to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. But, folks, mostly to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it is all about. Now, let's go take a look at one of our tools out there. I call this the tool of control. And what I want to do is I'm going to go ahead and sum this up in one very simple sentence. Take out your notepad, grab your pen. You want to write this down. You really want to write this down, folks. Only maybe 6, 7 words here. If I can't control it, let it go. Just think about it, folks. If I can't control something, just let it go. Now, what that also means is that any aspect of something that you can control, folks, and let's just take a look at it in the context of trading. We can look at it really in just about not just about, in fact, in every element of your life, folks. When it comes to trading, what are the things that you can control? You can control your risk capital. That's what I consider to be 1%. 1% or less of your capital that you put up as a risk on any one trade. You can control that. You can control your stops, right? Your stops on both sides of the trades. You've got to have, no matter what it is that you're trading, you've got to have an exit plan. When you start a business, you need to start that business with an exit plan. Well, this is running the money business, so you need to have an exit plan every time you enter a trade. That is on both sides. How often? 100, 1,000, 1,000,000% of the time. Always, folks, always have both sides of the trades in there. You can control that. What else can you control? You can control your stop size. So you can go back, you can adjust it, you can control your stop size. And what else? Once you have all that, folks, you can control your position size. You see, folks, if you focus only on those things that you control, here's what will happen. And it works this way. It doesn't matter trading, but certainly in trading, you're always fighting the battles out there. If you focus on only those things that you can control, you will eliminate 99.9999% of what most people worry about. You think about it. Go back and think about yesterday, maybe think about today, and if you want to eliminate the pain, the agony, because it always comes with those things that you can't control. You know, you hear Larry or myself talk about unfulfilled expectations. You know, unfulfilled expectations, those are your biggest disappointments. Well, look, folks, when it comes to trading, if you can't control it, let it go. What does that mean? You can't control the markets. You absolutely can't. All you can control is your trading. The markets are nothing more than somebody else on the other side. You can't control other people. You can only control yourself out there. If you've got an obstacle in front of you, folks, all you have to do is just ask yourself one question. What part of this obstacle is it that I can control? And I'll just leave you with this, because it's really all about, determining your destiny in life. At least I think that it is. And what happens to us, folks, that's not what determines our destiny. You see, what happens to us, it happens to all of us. The good, the bad, the ugly, the whole thing. It's how you respond to what happens to you, how I respond to what happens to me. That is what determines your destiny, folks. So write this down. If I can't control it, let it go. Now let's go take a look at these markets here that we can't control. Let's go see what they're doing right now. It's really a relatively flat market. What do I mean by that? Dow futures are basically flat and even. ES Mini is down 2 points. The NASDAQ futures up about 3.5. The Russell 2000 totally flat. King Dollar's not flat, though. The King, after making that 3 drive to a bottom pattern, that's up 27 ticks here this morning. Gold is flat, trading out at 16.15. Silver's down about 8 pennies right now, out at 27.99. Light sweet crude, though. Light sweet crude getting expensive. As I pass the pumps, the prices are going up. Why? Light sweet crude is up. You got light sweet crude trading out at almost $94, $93.88 right now. If we take a quick peek around the world, you've got Europe down. Both DAX is down 50. The FTSE's down 6. The IBEX in Spain is off 81 points. Over in Asia last night, they were throwing a party. You had the Nikkei up 97 points. That was up a little over 1%. The Shanghai up 13 points last night, 0.6%. And the Hang Seng up a full percentage point as well, up 203. Our call-in number, folks, here, 877-927-6648. If you are listening on the radio, thank you so much. You can always catch an archive of this show on Channel 9 on Tiger TV, and you can always watch us on Tiger TV, whether it's on your mobile device, on your computer. And so either put us on your mobile device at tfnn.mobi, or simply go over to the homepage at tfnn.com, click on that little link, the little box over on the right-hand side, and bookmark the Tiger's Den on your mobile device. So we talk about control out there. Now, what I love to be able to know, there's what I've got up on my screen here happens to be the 10-minute ES Mini. Why the 10-minute? Because right now, this is where the best pattern recognition is taking place. Yes, it's a short-term chart out here, but it's important to be able to understand, because what this is all about is this is your A to B equals CD patterns that are out there. This is all about your candle patterns out there. What we're talking about are really leading indicators. And on the 10-minute chart, it is working out just simply beautifully. And we can't control it, but what we can do is we can read what the other side of the trade, what the bulls and bears are absolutely telling you in each element of the trade. So let's go and let's start off here with the AB, the first A to B equals CD pattern. And we're going to start right down here with one of my favorite candles. That was a candle that actually came in. I wasn't paying attention because I was doing something else, multitasking yesterday morning. That was a candle that came in at 9 o'clock in the morning, 9 a.m. sharp. You had the ES Mini trade down to 1309.50, and it did it with a hammer candle. Now, the beauty of it, folks, is that the following candle after that, that was a bullish engulfing. You have two of my favorite candles out there. Of course, I do have those adoption papers in for Rick's Dojis, so pretty soon I'm going to be able to adopt those as well. Actually, I've always adopted them, but it sounds pretty fun. Now, if we take a look at the A to B equals CD out there, that A point being the low of that hammer candle, the B point when the market moved up into about the 10-20 time frame, up at 1396.25. Let's see here, 1396. So either 10-20, 10-30, doesn't matter. And then just simply it makes a low on two candles going lower. Does that at 10.50, getting into the 1393.50 area. You can see what the ES Mini does is just a little bit over a 1-to-1 A to B equals CD pattern out there. What's it do when it gets up there and completes it? It makes a bearish engulfing, and what it does is it gets a confirmation with a lower price. Let's take a look at our next A to B equals CD pattern that's out here. Let's look at the one coming off of the low that was established at 2:20 in the afternoon yesterday, out at 1395.50, moves up, creates a little shooting star here at 3:40 in the afternoon, moves back down into the time frame here now of about, let's see, 21:10. I got to do my math here, so 12. So that's about 9:10 in the evening yesterday when it made a low of 1396.50. Then, boom, off to the races while you were probably doing something else other than watching the charts out here. Passes the 1-to-1, no bullish sign. Passes the 1-to-1.272, no bullish sign. Gets up to that 1-to-1.618. Kabam! runs into a bullish sign. In fact, what is it? I'm going to go ahead and erase it off the chart here. What is it as I blow this up? Oh, it looks like one of those doji candles. A doji candle right when you're completing a pattern, and then what's it do? Gives you a little bearish engulf in a lower close. That says, okay, time to start moving lower, just making normal breathing patterns. Of course, that area gets tested. It gets tested here at the 2:40 in the morning time frame. I know everybody was sleeping and snoring out there. I think that was about the first time I was actually getting up. And then take a look at it, went back at about 3 in the morning, tested it again, did that, created a bearish engulf, and had another lower close out there right after that at 3:10. Now let's go take a look at the breathing pattern on the way down. Let's go take a look at the A to B equals CD on the way down out here. Our B point being 440 this morning when it came in at a price of 1396.75. Retraces all the way back up 6 a.m. Does it at the 1400.75 level, 1-to-1. A to B equals CD. What's that price projection? 1393.75. What's it do at 7:50 a.m. this morning? If you're watching on the Tiger TV, you're going to see 1393.75. And when it does that, what's it do on that following candle? Bullish engulfing, a little bit close higher. What does the market do? Starts to bounce up. Now, it's possible here that what it's doing is making a small A to B equals CD up. C point here hasn't been confirmed, but, you know, if you were trading these patterns here and you were to get in on this trade, what you would first take a look at is where would be the area. If you were looking at this chart right here, right now, if you were looking for an area of resistance, if you got in here because you saw it complete an A to B equals CD, and what I mean by here is somewhere in the 1396 range. If you got in on that trade, if you're looking at that chart, where would you find your first area of resistance? Just out of curiosity. Can I hear a number out there? Exactly. You guys got it right. You would come right into resistance right up here, you know, at this area here at 6 a.m. Why? Because what you also have up here is what? You got a bearish engulfing candle. Not just a small one. You got a pretty big one out there. It engulfs 1, 2, 3, 4... looks like maybe 5. Let's see, the open at 520 happened to be 1398.25, closed at 1398. Yes, it sure did. So you've got a fairly large bearish engulfing candle. So you see the candles out there, folks. You want to be able to put together A to B equals CD patterns. That's only if you want to take a look at leading indicators. That's not the only way to trade. You can utilize lagging indicators out there, absolutely. But if you're looking for leading indicators, if you want to be out in advance, if you want to know what to be looking for, it's really just putting together, you know, your A to B equals CD. It's about putting together your sacred geometry numbers, and it's about just simply watching what the market is telling you. The market is absolutely 100% all the time communicating to us, and you just simply can see it between the bulls and the bears. And why do you want to be able to understand as you enter a trade, where is it that you're going to find your first area of resistance? You got that right as well. You want to do that because, what do we say? You want to be able to focus on what you can control. That means you have to have both exit strategies. You've got to have where is it that you're going to exit if the trade is successful, and where are you going to exit if the trade is not successful. You may not have had the right money management aspect in here to have taken the trade. In other words, what I mean by that is if you take a look at getting in here maybe at 1396, you know you're going to run into resistance at 1400, you know, that might have not been the right reward to risk. And that's what it's all about, folks. Ooh, it is a beautiful Thursday morning. I absolutely love being here with you. You can give us a call at 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And I had a request to go take a look at gold. It was back in the May-June timeframe where I gave gold. I didn't give gold. It was really the market gave gold the target of a possibility of moving down into the 1150 area. Now, when I take a look at anything that I trade out there, you know what I like to do. And each morning in my newsletter, I give my clients a market posture. Now, that market posture that I take a look at is of the S&P 500. And when I take a look at market postures, I break it down into three areas. I break it down into long-term, intermediate term, and short-term. What do I mean by that? Long-term, I take a look at monthly charts. Intermediate, and maybe a couple of other indicators out there. Well, obviously, I'm looking at a chart. There's going to be indicators. Intermediate term, I'm looking at weekly charts, and then short-term. Now, what you really like to be able to have is you like to have all three of those things in sync with each other. Right now with gold, we don't have all three of those time patterns in sync. But let's start off. Let's first go back to how is it that I came up with 1150 as a target area. Number one, what I was doing, if you're watching on Tiger TV, you're looking at the weekly chart. So I'm going to start with weekly, go up to monthly, and then back down to where are we right here, right now, daily. So when we take a look at the monthly chart, you've got this beautiful uptrend that was established coming off of the low going all the way back to October 20, for the week of October 24th, 2008, when gold had a low of $681. Then what you can see is that black line, that black diagonal line, just really a normal, gradual 45-ish degree angle. You couldn't ask for anything better from a bull market standpoint. So you can really see that bull leg of gold. Now, what happened back in fact, it happened exactly May 18th. So it was May 18th that my outlook for gold all of a sudden turned from bullish to bearish. Why? Because it was the first time that you had gold break that uptrend that was in. And it did it with pretty decent conviction, 936,000 contracts as we take a look at the continuous contract there. What you also had happen at that same time, or just about that same time, could have been the following week. No, it was actually at that same time. I'm sitting there on the candle. Is what you had, folks, is you had what's the equivalent of the 50-day and 200-day moving average. Now, on a weekly chart, just depends on how your charting software works. In this case here, I'm looking at a 10-week. Okay, because you got 5 days in a week, that makes your 50. So a 10 and a 40, and because then it's just taking a look at the last 10 candles and the last 40 candles, and I use an exponential moving average. Nothing simple about Steve-O-san. So you got that crossover, you got the break of that uptrend channel, and what does that establish? Well, the very first thing that you want to be able to do is you want to go from the lows of an important swing point up to the high. Well, we know the low is, or at least I believe the low is where I started back in October of 2010, and the high that we were talking about coming in during the week of September 9th, 2011, when you had gold up at 1923. You just simply take a retracement of that, and what you'll see is that 1450 is your 0.382, and your 1150 is at that 0.618. Very easy. We know that markets move in those areas. Then you start taking a look at A to B equals CD down. Gold is going to do gold if gold does move down, because King Dollar is going to be moving higher. What you're going to see is, and because gold is certainly valued in dollars, so over the intermediate term here, what this is saying is that gold wants you to simply make a 1 to 1.618, A to B equals CD down. Absolutely normal. In fact, you probably won't find a lot of folks that will be telling you that the story in gold is over. Of course, what you'll know is you'll say, hey, that's nothing more than a 618 retracement. That's a Gartley buy pattern, quite frankly. And in a bull market, what you want to do is you certainly want to be able to buy the first AB equals CD down. Hasn't really occurred. Well, I guess there might be a small one. But anyways, so let me go over and take a look at the monthly chart here, because I can go on and talk about this forever. So if we go take a look at the monthly chart on gold, because I want to really get to the daily. Why? Because that's where you're going to see the divergence. If we take a look at the monthly here right now, what you are seeing with the monthly chart, now I use a little bit faster moving average. It's still the 50 and 200-day moving average. But what you can see right now, just to give you that idea, the 50-day version on the monthly is at 1613, and the 200-day is at 1624. Really close to making a crossover there. When that crosses over, what happens? You switch your long-term outlook to bullish on gold. Now let's go take a look at the daily chart. If we take a look at the daily chart out here, what you're going to see is a divergence, because right now the daily chart, number one, it broke through this symmetrical triangle here, and that means, folks, that what gold should be doing, gold should be moving higher. Now, what's holding gold in place here happens to be the 200-day moving average. If gold can break above that right now, that's at $1,623. That all of a sudden puts gold into a bullish mode. In fact, gold right now, I believe, is very close to being in a bullish mode. Why do I say that? Well, because what you had occur yesterday is you had the 20-day cross through the 50-day. I want to see if I've got that here on my charts. I don't. I'm going to have to paint that in right now. So I got the 20-day and the 50-day here on the gold contract, and what you're going to see, I'll blow this up for you real quickly here. Gold is slipping into a short-term bullish pattern right now, and if that does that, it may take the monthly along with it as well. 877-927-6648. Gold trading out at 16.15 right now, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization automation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, first Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow off 10 points right now. S&P's off 2. Composite up 90 cents. Small caps down 69 cents. Microsoft up 17 ticks. Intel up 12. Google up a couple bucks. Cisco up 51 cents. Apple trade down at 618.86. That's up $1.65. Dollar-wise, on the way to the upside here. Robbins and Myers, RBN. I believe that is a merger between National Oil Varco and Robbins. They're having a nice little boost this morning. That's up at the about 26%, up by 12 bucks and change. Then leading the charge right behind them, you've got Elizabeth Arden. RDEN is the ticker symbol out there. News-wise, I don't see anything news-wise. Let me see here. What is driving that? That is up 19% this morning. Let's take a look at their Q4. What's their revenues here? Let's see, Sales, it's got some, okay, net income, there we go. So Q4 net income, $8.5 million versus $5.4. Very nice. Net sales, 265 versus 253, and they are expecting net sales of about $340 million. So that is popping up nicely, up nice 19%. We'll take a look at that. Dillard's, DDS, the ticker symbol. They also are up about 7% this morning. That is up $5 and change. Let's go see what Dillard's, there's some Dillard stores here in Florida for sure. They had Q2 net income, $31 million versus $17.6. Nice going there. And on the revenue side, $1.49 versus $1.44. So not much in the way of growth on sales, but they have done a good job, certainly, managing their bottom line. Next up, you've got FleetCor, FLT, up 6%. That's up a couple of bucks. Let's see if they had some earnings releases. Q2 revenues rise 28%. To $171 million versus $134. Their income, if I can find it, $63 million, which was 73 cents a share, or about $47.8 million from the prior year. So they are doing nicely out there. Apple trading up next, and you've got Allscripts Health up 19% this morning. That's up $1.87. The stock trading out at $11.47. MDRX is their ticker symbol here. Looks like that is just a result of a upgrade and perhaps the nice move on Express Scripts yesterday. It does some Q2 revenue, $370 million versus $356, and they did income $8 million versus $15.9. So it must be the guidance that the street is liking out there. To the downside, Priceline continuing its sludge downward. Don't get in front of that thing. That had some monster volume, monster price move yesterday. Priceline down only another $4. It's a $558 stock, so it's not even down about maybe 0.6%. You got Monster Beverage out there, MNST disappointing. The market last night with its earnings release, they're down $4.60. That's down about 7%. You've got Sagent Pharmaceuticals, SGNT. They're trading off 20% this morning. Advance Auto Parts, all those auto parts companies struggling, down $3. That's down 4%. Metis Pharmaceuticals, MRX, that is off 9%. And Rosetta Stone dropping a few stones here this morning. They're down 19%. That's off $2.54. Let's go see what their revenue was. Their total revenue, $60 million versus $66 million. So revenue dropping there, $4.5 million loss versus $4.5 million loss. Wow. I wonder what their cash actually looks like. That is on Rosetta Stone. Our call number, 877-927-6648. What do you got to be careful of, folks? Let me tell you. If you're long and strong, and no question, this market has fought off a lot of bearish sentiment out there, and it's doing it really again this morning out here. But you got to be careful for the cracks that are out there in the on the ice. Why? Because we're taking a look at here is we're taking a look at King Dollar. We're looking at the daily King Dollar chart, U.S. dollar index, and what you can see going on there. Well, if you don't see it, you've got this beautiful three drive to a bottom pattern that came in here and finished 2 trading sessions ago down at a price point of 82.07. That 82.07, folks, that is really a key area. That area there gets broken, and you're going to see QE 4, 5, and 6. No, I don't know how many QEs you're going to get, but it absolutely would tell you that the U.S. dollar index is going to trade much lower. That would put some real energy into the markets here. But right now, what you've got is you created that with a doji-ish type candle. You certainly had that yesterday as well. What is a doji? A doji, folks, is indecision. It's actually equality, if you will, between the bulls and the bears out there. It's when the market is probably most at rest because it rests right there pretty much in the center. But today, and the session's not over, today you're seeing some real strength out there in the U.S. dollar index, certainly in this pattern out here. And what that says, because we know there's that directional correlation that exists in the markets, or certainly it used to exist. And it still is out there. Strong dollar, weak market out there. And we can see the results as you just take a look at revenues for large cap companies out there. So that now you've got King Dollar on the rise. It's up at 82.75 right now. What's that really all about? All you have to do is just switch over and take a look at the euro. The euro making really the opposite pattern where it made a 0.618 retracement. That's why you want to take a look at those 0.618 retracements of swing points. So we know that the euro did that. It completed that with a doji on August the 7th. Yesterday, you had the confirmation and the follow-through. You had a lower close. Now what the euro is doing is pulling back. So now that we completed that pattern, let's go ahead and erase those lines for you. Let's go see where it would pull back to. And as I draw these lines and I say, guys, where would this pull back to? What are you going to say? Sweet what? Sweet 618. Sweet Georgia Brown. So if we go take a look at Sweet 618, we're just simply going to go ahead and take a look at the July 24th low, 1.20411, and we're going to go up to the high. The high came in on August 6th. Looks like maybe the same high on August 7th as well. You can see right now, actually, let me just change that here to the dark black color. That way I'll make it easier. In fact, let me get rid of this other one out here as well. Okay, so now what we can take a look at what the euro has done right now is it's popped down to that 0.382 level. You can always expect that. I mean, that's the dead cat bounce, if you will. So you got the euro now. It's coming down there. It's coming down pretty hard. What I mean by pretty hard, you're starting to get some wider ranging bars on the way down. Just take a look at how it made it with the doji on August 7th. Then take a look at yesterday's candle. Now take a look at today's candle. You're down towards the session low. Session's not over. I realize that. And so if you take a look at that, it is really, and it's coming into this wide-ranging bar. That was the Draghi, you got two Draghi candle bars out there. August 3rd was one of them, and actually August 4th. August 2nd was really his bar, but I suspect August 3rd was his as well, as they reworked and they recrafted the language about what he really meant when he said, we need to band together. Well, right now, the banding together is people are selling the euro. Our markets are going up. There is a dislocation out there. So I just simply suggest you be careful out there. That is on the euro. The euro headed down to 1.21942. Now, once you make it to the 0.382 level, what you should do is you should back off. So if we actually take a look at the 30-minute chart, let's go see if I got a 30-minute chart out here on the euro. I've got a 10-minute chart. Let's go take a look at the euro U.S. dollar. I've got to refresh the screen here just so we fill it in so I get the proper data. And as we do that, come on. There we go. Okay, so now we're taking a look at the 30-minute chart here on the euro. So we know it made that 0.382 level. So now let's go take a look. As it makes that 0.382 level, let's go look at the candles out there. Oh, what candle did it make? Look at Steve's candle. At 9:30 this morning, as it's making that 0.382 level, you can see that's the low. You saw on the daily chart. Now we just dug down to the 10-minute chart, made a hammer candle. Makes a hammer candle. What does that mean? It means, at that 0.382 level, you should have some pretty good support. That area gets cracked. What does that mean? That means if you're long, you're wrong when it comes to the euro. And so right now you would expect so it's great because you've got the line drawn in the sand. You had it drawn in the sand on the daily chart. If you're trading, if you're intraday trading, here's what you just simply want to pay attention to. Put up a 10-minute euro U.S. dollar chart out there, and that will help to guide the way. Now, unfortunately, on the next candle, you didn't really get a higher open, you didn't get a higher close, and so it makes that the hammer candle very, very suspect out there. That's not what I like to see when I see hammer candles out there. Still a hammer, though, and the beautiful thing is the line has been drawn in the sand. So you get a close below. I'll give you that exact dollar amount. And on a 10-minute chart, so that makes it pretty easy, 1.22850. You get a close below that. If you're long, you're wrong. Pretty simple. Let's go take a look at some of these stocks here that are popping and dropping. So let's go take a look at, I'm just curious about Rosetta Stone, RST is the ticker symbol. When you travel through the airports, you see them pretty much in every airport out there. And I've wondered, how do they make money? Never really looked at the chart, but I also always wondered, how do they make money? Well, apparently the last couple of quarters, they're not making money. And so gapping down this morning, trade now to 1062. You got volume to the downside. Already has done 215,000 shares. If we take a look at what that's going into, it's going into a fairly decent up spike that it had here on May the 8th. It's trading below that area being 1071. It's trading out at 1065 right now. That volume to the upside that it had, that little breakout, 373,000 shares. As I said, so far today, you've done 224,000 in just a short period of time, 14 minutes of trading out there. If we take a look at Rosetta Stone, let's put this thing, yikes. Oh, man, is that really true? Let's put this thing out here. So it looks like this thing, let me just make sure I've got all the data. Looks like I do. This was a IPO, folks, came out on April 16, 2009. That session traded somewhere between $24 and 26. Made an actual high. Let me just kind of explode this up a little bit here. Makes its high on July 31st, 2009, out at $32.97. All those folks that bought that never saw that again. Could still be in the stock there, if they weren't using stops, that's for sure. Now let's go take a look at the weekly chart out here, see what Rosetta Stone is doing. Yikes. So Rosetta Stone is clearly breaking where it last broke out on the weekly, on the daily. That goes back to that May 11, 2012. What's that set up? That sets up Rosetta Stone going back to $6.55. And if you're in it at 1074, don't be in it at 1074. Get your cash back. That's on Rosetta Stone. Let's go take a look at Monster Beverage. Used to trade that stock all the time, 2005, 2006. That was a beautiful trading stock chart out there, and they still have the same. And they would disappoint, and they would get the news out there, and they would push it up. It was a beauty. Taking a look at it, it was traded under a different symbol back then. It wasn't MSFT. I wish I could remember what it was. I'm sure I will in a bit. If we take a look at Monster, I'm looking at Microsoft. You don't want me to look at Microsoft. That's not the chart. It's MNST. I had Monster Beverage on. I've never actually had one, MNST. And how I started trading that, folks, that was back when I was trading fundamentally. And it was just simply by walking through. I used to go to Costco all the time to get all my office supplies and other things for the office. And I was just watching all these people wheeling out those energy drinks, and I just simply decided to investigate it. And Monster Beverage was the stock chart to trade out there. So Monster Beverage this morning here, gapping down, has done 2.2 million shares in 17 minutes. It's coming into a swing point on the daily chart that's got 3.5 million shares. That low is $61.72. You had some huge institutional selling in this stock on June 28, 2012. I believe that was because of then the personality of this stock. These guys push out rumors like you wouldn't believe. And so I believe that was what was going on in that June 28th, June 29th time frame. Still doesn't matter. You got the institutional selling going out of this stock. You're trading below that area. It looks like the first A to B equals CD down has probably been completed. Then it bounced up. Let's take a look at that. First A to B equals CD. It certainly does it. A to B equals CD. That price projection was 62.35. That's the swing point right now it's going into, which is July 23rd. And now it is likely, if you close below the price point of 61.72 and you have volume of more than 3.5 million shares, then it's setting up a larger A to B equals CD down. What's that thing look like on Monster Beverage? We take a look at Monster Beverage. Look at what it did when it made the high out there, folks. You see that candle, that June 18th, that Steve adopted candle, that little doji out there, and then the next trading session, what do? You close lower and then look at it. It makes an A to B equals CD down. So now let's go take a look at the potential larger A to B equals CD down in Monster Beverage. That takes you down in the 52.47 price point. What's out there? Oh, that's where you saw a little sign of strength with a gap up. It's got an open gap in the $47 area. Looks like that's where Monster Beverage wants to trade to. So I mentioned the dojis. I mentioned things at the tops out there. We were taking a look at the ES Mini before. We were taking a look at, when I came onto the air in that 9:30 session, we were taking a look at those AB equals CDs that were out there. What you can see here right now on the 10-minute chart, we had a bullish engulfing when the C point was made. That was made at 9:30, so just as we were going into breakout there. And now what you can see is so far you've made a 1 to 1.272 A to B equals CD. What was that testing? The 1-to-1 was actually $13.99, so almost $1,400. When it came on the air, I said, where are you going to find some serious resistance inside the ES Mini, looking at the 10-minute chart, folks? We said right where we saw that bearish engulfing candle at 610 this morning. That high out there really is the prior candle, 1400.75. Right now, that is your resistance point. 877-927-6648. Dow's up 6, S&P's flat. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. And yet, Tom and I up next, and as it's a full session as we do now every day, 5 days a week, 9 to 6. After the Money Masters show, we go out to Kate Stalter out in Santa Fe, New Mexico from 11 to 12. Then we go just a little bit further north up to Larry Pesavento for the Futures Hour from 12 to 1. Daryl Martin back in Texas from 1 to 2. David White back here from 2 to 3. Back out to California. We're going to take our supersonic jet out there to listen to Ken Shreve, and then back here for the Tom O'Brien Show, folks. Now let's go take a look at a stock that truly does look like it is breaking out. That is Elizabeth Arden. That is up 19.6% here this morning. And if we go take a look at it, it's trading out right now at $46 and change. So it's having a nice breakout. It's doing it with volume out there. Volume behind the move so far, 356,000 shares, not 356 million shares. Let's go take a look at this on a weekly and a monthly basis out here. See what this thing is doing. So it looks like, let me just refresh this back here. So it sounds like a lot of women out there are buying products at Elizabeth Arden. I've never been in the store. I don't know, what do they sell? Clothing? I think it's clothing out there, and perfume. It's got to be clothing and perfume. That's the only thing that could make it rocket up to $46.62. So on the weekly chart, certainly a breakout. Let me just put this thing on a now volume on this thing. It hasn't exactly had a ton of volume on the upside. There certainly are some big down spikes out here. Let's go put this on a monthly chart, see what we've got here on the monthly chart for Elizabeth Arden. Man, what a breakout. Let's see what kind of expansion this is of swing points out here. I'm going to go from the swing point of October 2007 down to the swing point here of March of 2009. March 2009, the stock was trading at $3.93. So it's a nice, 12, 13 bagger out there, up above the 1.618 expansion out here. Elizabeth Arden should have some support at the price point of $33.96. That's the last time that there was any volume. Let me just make sure I'll refresh this screen here. That's the last time that this stock had any kind of real support out there. Trading out now at $46.69. Pretty tough to identify where this thing might head to. Let's go take a look at the Gap. You know, there's been some clothing companies out there that have performed pretty well. Let's go take a look at the Gap. GPS is the ticker symbol. Where is that here? GPS. I believe that's the Gap ticker symbol. Yeah, it is. Look at that. Look at Gap is continuing to motor higher. Let's put this thing on a weekly basis as well. Time frame here. Weekly, and if we take a look at the Gap had made a real nice butterfly pattern. Let's go take a look at, in fact, let's first just take a look at the expansion of swing points. When you're drawing a butterfly or a Gartley pattern, that's really what you want to do, is start taking a look at an expansion of swing points. In the case on the weekly chart, you'd go from the April highs down to the lows that were established in the low here on the weekly chart, September 9, 2011. And you can see that the Gap had made a real nice 1.618 butterfly, and that butterfly pattern failed. If we take a look at that butterfly pattern, that was on the, I'll just complete it this way. There's the 1.618 butterfly pattern. You are trading up above that. That sets going up to the next level. That next level would be at least a 2.0 expansion. Well, folks, thanks so much for being here. Tom and I will be up next, and let me leave you with these thoughts here. The way you do anything, folks, you know what that means? That is the way you do everything. So if you can't control it, what are you going to do? You're going to let it go. You absolutely need to do that. You don't want to be a prisoner of your past, folks. You want to be a pioneer of your future. Why? Because, folks, you have got an amazing power within yourself. And that power, folks, it is so strong that it'll bring about miraculous outcomes. It'll produce a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but mostly, folks, build fantastic, loving families. Thanks so much for being a part of our family. We love you, and have a great morning. Take care.